if this is going to be a better year than the previous year, is it your expectation that we'll have double-digit returns? Because last year was flattish.
Yeah. So do big picture. So in every 6-7 years, there's one bad year.
Yeah.
That one bad year is not bad only for that year. It takes away the returns of the previous year and mostly sometimes even the 1 year before that.
3 years.
So you get 4 years of returns in a 7-year cycle. So that means the years in which it is positive on average is more than the 13-14% 7-year average. So when it is up, it has to be up more. Now, that part, you might be right, that might happen in the second half. Why? Because the US will be keeping these rates for some time. They say 8-9 months, whatever. So maybe by end of year, the US rates will be cut, which also allows India to cut and all that. And if the world is actually relishing a rally, then all that will happen by end of the year, because a few months will be at these high rates, which are not increasing anymore, but are still quite high, the US rates. And therefore, I think end of the year, you might in one spurt get the last 5-7% extra overall returns higher than 10% for sure, I think.
So the gains will come in the last quarter?
I'm saying if for the general year, the market is flat to up a little, and then you get something right at the end, that also is acceptable. All we don't like is a minus 10% kind of a year. Plus, we all accept that over time, equity markets beat debt by a reasonable number, which is like 5 to 7% per annum, which is basically the equity risk premium, which means what the equity markets deliver relative to government 10-year type bond of that same market. That globally and in India on annualized basis is 5, 6, 7% per annum. So that normally leads us to be 13, 15, 14% type of return, which you can see we have done for the last 25 years, for the last 10 years, for the last 18 years. Why I say 18 years? Because Helios started 18 years ago, so I know exactly what the index has done. Broadly speaking, it is the 13, 15%. So plus minus a little bit, it'll do the similar amount.
No, what you say is especially important this year because a lot of local investors have this quandary because last year was flat for equities. This year they're saying they'll get 7-8% on fixed deposits. So
yeah, that is true.
Equities have to beat that 2 years running. Will they be able to beat that?
Over time they will beat. If they don't beat it in 1 year, then they will beat it with compound interest in the next year. So you look at 2000, 2001. 2002 was a particularly boring year, flattish kind of a year. It was not a negative year. But after that, from 3 to 7, you got everything back. That part is inviolable that you will make 6-7% more than fixed income over time. Now, if it came every year, it would be too easy. So it can't happen every year as a clockwork. But it happens over time, and there is no reason to say that today, India's situation relative to the world has not improved, whether you call it compared to China, compared to Europe, and in general compared to other markets. And therefore, we will get our fair share of foreign flows. That, along with the fact that Indian flows are also good these days, and that there's nothing bad happening otherwise in terms of economy or this thing, yeah, you will make similar returns as you have made in the past.
The other decision a lot of local investors need to make is where do they put their money? Because last couple of years they have invested in some PMSs, mutual funds, but a whole lot of them have struggled to beat the Nifty. Should they just be buying index funds and paying peanuts? And
no, absolutely not. Please don't do that. So the thing
is it a problem? It is getting to be a problem to beat the index.
For 1 year, it has been a problem because the stocks that have gone up last year, we don't buy. Nobody buys Coal India and NTPC except the guy who bought them, but then he underperformed the previous 9 years. So the point is, some of these value type stocks, these are not even real value. These are just beaten up, forgotten, should not have been listed kind of stocks. So if they do well for some time, that doesn't really make that a viable strategy going forward. India is a growth market. See, value can work in many situations, but the main situation is that you should have the ability to take over assets, break up assets, go to court, change managements, force management, just unlocking value in some sense. All that is not possible here and nobody has the energy to do it. So we would stick with our broad thesis that the three big sectors in India are financials, consumer and technology, which is mostly the case everywhere. If you look at the Forbes billionaires list and say from where have these billionaires come, because that is the genuine long-term wealth creation in long term, all come mostly from financials, tech and consumer.
Yet I believe that you have sold your IT stocks for the first time in life.
I have sold many stocks in my life, but first time I have gone to near zero weight, which worked for the last 7-8 months, didn't work this month.
All gone? Infosys, TCS, everything?
All gone. Because, the thing is that I have 100 rupees. So I can put it here or there. I have not sold India. I have only sold one sector and bought another.
I'm not blaming you. I'm asking you. Because you've been an IT bull for the longest time.
I have been all my life an IT bull, and that is what made me my performance in the 90s. But over time, I realized that the IT guys have only a 2-month lead over me, if at all, in terms of what they can see. Because in 2000, I saw that they kept saying we are getting orders, and nothing happened. And now, when you can see the very visible symbols that even Satya Nadella comes and says that when he said that I'm firing these 12,000 employees that are...
That's Pichai, Sundar
that
Pichai.
No, not Sundar Pichai. Satya Nadella said, Microsoft. That we are seeing slowdown in customers. Just now, I think yesterday or day before. Then the cloud companies, the business software companies, Salesforce, then the cyber security companies, all of them are seeing slowdown. Only one group does not see slowdown, which is the Indian IT companies. And I don't believe it for now.
They are misleading investors, you think?
No, they refuse to talk about the future. They'll say, right now we are not seeing. Because right now you are getting orders based on the current US economy, which is actually doing well. The US Federal Reserve is trying to engineer a slowdown. Otherwise, currently, of course, the economy was doing well. That is why the inflation was high and the jobs opportunities were high, and therefore the employees were having more job opportunities. Therefore, they are acting tough and resigning or asking for higher. So this is a little bit ahead, if at all. But I don't think that they're going to massively outperform that. I will feel very bad if I don't have it.